Good morning this Wednesday, the 1st of May. I'm Grady Wolf, market analyst with Bell Direct. Wall Street tumbled on Tuesday to close out a losing month following the release of the latest inflation data and ahead of the Fed's latest interest rate decision out on Wednesday, US time. The S&P 500 fell 1.57% on Tuesday, the Dow Jones lost 1.5% and the tech-heavy Nasdaq tumbled 2.04%. For the month of April, the three key indices posted notable losses. Higher than expected wages data has raised investor concerns of the rate cut outlook out of the Fed. For the first quarter, the employment cost index, which measures wages and benefits, climbed 1.2%, which was above economists' expectations of a 1% rise. US Treasury yields rose after the data was released as investors sought out safer investment returns in the higher for longer interest rate environment, if that is the Fed's stance after the meeting on Wednesday, US time, where it is widely expected the Fed will maintain the current cash rate of 5.25% to 5.5%. Across the European markets overnight, markets closed mostly in the red to record their first negative month since October as investors assess the latest slew of earnings results. The Stoxx 600 fell 0.6% on Tuesday, Germany's DAX lost 1.03%, the French CAC declined 0.99%, and in the UK the FTSE 100 closed Tuesday's session down just 0.04%. On the corporate earnings front, Mercedes and Volkswagen both posted declines in profit, which led to shares in the auto giants falling 5.2% and 4.6% respectively, while Air France KLM shares fell 3.4% after the airline posted a first quarter loss of €489 million, which the company attributed to costs associated with disruptions and a slower cargo business. Preliminary Eurozone inflation data showed inflation in the region held steady at 2.4% for April, which met economists' expectations. In Asia overnight, markets closed mostly higher as investors assessed factory activity figures out of China, which came in at an expansion to 50.4 in April compared to 50.8 in March, which beat economists' expectations but indicated a slower pace of activity expansion in the world's second largest economy. Japan's Nikkei closed flat on Tuesday, Hong Kong's Hang Seng index rose 0.09%, and South Korea's Kospi index rose 0.17%. The local index started the week on a green run, with the key index closing Tuesday's session up 0.35%, led by consumer discretionary and real estate stocks, which are two of the rate-sensitive sectors. Lithium miners got a much-needed boost yesterday on the rising price of lithium carbonate, which sent Arcadium Lithium to the top of the ASX 200 winners list with an 8.4% rise, while IGO rose 7.3% and Liontown Resources added 2.9%. Investors got a boost as well from Australia's retail data spend out yesterday for March, indicating a 0.4% fall in consumer spend, which was well below the 0.2% rise economists were expecting. Retail spend is a key driver of inflation, and this reading is a key supporting factor for the RBA to realise some key inflation drivers are easing, which supports the notion to maintain rates at the current level instead of considering another rate hike. Earnings season continues in Australia for the latest quarter, which saw investors respond with mixed reactions on Tuesday. Australian fuel supplier and producer Ampol fell 3.3% after reporting a 21% drop in its Lytton refiner margin and a 7.3% decline in refinery production over the last 3 months. On the commodities front this morning, oil is down 0.92% to $81.96 a barrel. Gold is down 1.61% at $2,295 an ounce, and iron ore is up 0.35% at $110.54 a tonne. One Aussie dollar is buying 65 US cents, 102.26 Japanese yen, 52.05 British pence, and 1 New Zealand dollar and 10 cents. Ahead of the midweek session here in Australia and the first trading session for May, the SPI futures are expecting the ASX to open the day down 1.2%, and that's tracking that global sell-off overnight. And now let's dive into a trading idea for your consideration today. Bell Potter has downgraded Telix Pharmaceuticals from a buy to a hold and maintained a $14.50 price target on the leading cancer imaging and therapy agent pharmaceuticals company, following the release of an outstanding first quarter 24 revenue growth result and a major inflection point approaching for the company through its first therapeutic asset being a crucial piece to the long-term value proposition of the company. The downgrade to a hold is simply due to valuation, as the share price has been on a run recently, and this is the first downgrade since Bell Potter first initiated coverage of the company in 2021. And that's all for today. Have a wonderful Wednesday, and as always, happy investing.